Hello, we're gonna take a look at a company that's been highly mentioned on the internet right now, and it's a technology, hardware, storage, and peripherals company. It's a well-known brand. It's Corsair Gaming. You may have seen a lot of its hardware, really. And ticker symbol is CRSR, and currently sitting at near 20 USD and 19.454 over here. Used to be almost 50 over here, so it's actually gone down a lot, and it's almost 50% down in the last year. And thus, we want to take a little bit of a closer look, see if it makes any sense to add this one to our portfolio for potential growth in the future. Interesting to notice that the current PE is sitting at 16.4, which generally speaking points to another valued company, especially in the information technology sector. The outstanding shares are very, very low, and the interesting thing is that they have issued a few more, but it's not a substantial amount. It's very, very little. It's like 2 million more. So when you compare it to the whole float, the whole outstanding shares count is about 2%. So that's not too bad, really. I wouldn't be concerned about it. It's marginal. It's a marginal increase. And a price to book ratio, which is it's not bad, 3.4. So we're going to be taking a look at the fundamentals of the company, see the financial analysis stuff over here. The income statement comes first, and we're going to take a look here at the total revenue of the company. It seems to be growing very, very nicely, and I love to see that because it means that the company is actually able to sell a lot of stuff. And so it was $800 million back in 2017. It more than doubled in the last 12 months. Great to see, with a good year-over-year growth as well, and increase in gross profit too, and actually a lot of increase in the gross profit of the company. So it looks like they are very, very efficient in the way they are running things here, making more and more money on the money that they spend for making the revenue. So that's good to see. And what about the net income here, which is the bottom line basically? And the net income was kind of close to zero here, a little bit more, a little bit less, but now it's starting to gain some steam here, and it's positive. It's $120 million here. Good to see as well for the company. And the assets of the company, total assets 1.3 billion, also an increase here, a good increase as well from 2017. And the total liabilities of the company sitting at a little bit less of than $1 billion, 800 million. Total equity was kind of the same in the last 3 years before the pandemic, I'd say. And so right now it's sitting at 537 million. It's increasing overall year over year, with some years for a decrease and kind of staying the same. But 2020 and 2021 were good years for the company, it looks like. So that's good to see. Cash flow, the very, very important thing, especially for these kinds of relatively new companies. So the cash flow here, cash from operations is positive. Went a little bit down in the last 12 months, but still looking good and much, much better than what it used to be in 2017. So capital expenditures here from investing and from the investing the investing statement, basically flow statement, and some spending on acquisitions back in 2017, but not much spending here. So company not investing much really. Cash from financing, mostly paying back debt lately. Yeah, paying back long-term debt. Good to see. Cash from financing 132 million here back in 2019. Because they got some issued debt over here in the last years, 2017 to 2019. Looks like they are paying it back. Free cash flow in the positive here, just a little bit less of what it used to be. Now the company's market cap is at $1.8 billion, and the company is making about 100 million, let's just say, a year. So with a multiple of 20, you're looking at a $2 billion company, which is fair. I think that's very, very fair. And it's I think there is a good potential for the company to actually keep growing its free cash flows based on what I'm seeing in terms of their previous growth. Looks like the company is actually doing fairly well. We have a few multiples here. but they are pretty good. I mean, EV to sales here, that's enterprise value, and a ratio that defines the enterprise value divided by sales. And so the lower it is, the better it is, because you're getting more sales for your buck, for your enterprise value, for the company's value. And the lower the better. That's pretty low, that's pretty good. And you can see here how the enterprise value is calculated. It's basically summing the market capitalization with cash investments and short-term investments, and also accounting for the total debt of the company. And profitability here, you can see that the return on equity of the company is sitting at 25%. That's massive. And I'm actually surprised because the company doesn't even have much debt. And so you can use debt to kind of skew this number, but the company doesn't seem to be having a lot of debt. So that's a very interesting metric here. It looks fairly nice, really. Solvency here, a little bit of more debt, actually. Yeah, a little bit of more debt when you compare it to equity, though, just because the company doesn't really have that much equity, I guess. So that makes some sense. But overall, I'm not too worried about the debt of the company. And I kind of wanted to take another look here at the total liabilities of the company. That would be on the income statement. Sorry, the balance sheet, my bad. And total liabilities here were about a little bit less than $1 billion. Yeah, companies made 160 and close to 100, right, in the free cash flow. Over here, 62 and 160. So that would be about 6 to 7 years of debt with this kind of cash flow, really. So actually, it is a little bit of debt, so it's not negligible. So you should pay a little bit of attention. Yet I don't feel that it's too much debt to be worried about, really. So what would I be doing with Corsair Gaming? I kind of like it. It's a little bit of a growth play here, and I like the fact that they are not overvalued much. They have, a little bit of more debt than what I actually thought initially. Yet I feel that their current growth situation, and even what the analysts predict here in terms of their next 12 months, that's actually pretty good. And I kind of like what I'm seeing here with Corsair. So I think I would be buying a little bit of this company, and just be a little bit cautious about the outstanding shares, because you may see that the company eventually starts funding themselves from investors. If that starts getting too high and they start printing shares here and there, I would probably exit the stock because I don't like dilution. But currently it looks like they're doing well, and they're in terms of financials, I mean. And the fact that the company's stock price has gone down deeply has me thinking that it may be a very, very interesting play for the future, really, just to buy that and hold it for a while, because you can potentially level 2x or 3x this one. I don't see why not, really, especially when the market goes back to normalcy. Yeah, so that's what I wanted to talk about in terms of Corsair. Let me know what you think about the company. I'd like to hear your thoughts about it. And I really hope you enjoyed the video. If you did like it, please leave a like and subscribe. And also join us on Discord. You can find the link in the description box below. In the meantime, you can take a look at this video that I made a little bit earlier about Majestic Silver, an interesting silver play. Take a look at that. And thank you for watching. Bye bye.